Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the corporate world. And let me tell you, Visa's latest proxy statement is a doozy packed with enough detail to make your head spin, but we'll untangle it all. So Visa's proxy statement for their 2026 annual meeting of shareholders has just dropped. And it's basically a roadmap for how the company is run, who's in charge, and how they reward their top brass. Think of it as the ultimate shareholder's guide to Visa's inner workings before we dive in. If you like cracking open these corporate documents to see what is really going on, hit that subscribe button. And if you want to chat about this and other filings, our Discord community link is in the description below, so join the conversation. First off, the company is really pushing its image as a global payment enabler, highlighting how it creates opportunities for everyone, everywhere by making payments easier. They're talking about transforming transactions and supporting businesses with a whole suite of services from fraud management to data analytics. It's all about digital payments for consumers, businesses, and even governments worldwide. Inside, we get a letter from John F. Lundgren, the independent board chair, and Ryan Minerney, the chief executive officer. They're thanking shareholders for their investment and inviting everyone to the virtual annual meeting on the 27th of January 2026. They paint a picture of an outstanding year. Especially in 2025, with strong results and exciting new capabilities, they emphasize their strategy, talent, and assets that make Visa the best way to pay and be paid. They also chat about their board composition, governance, executive pay, and corporate responsibility. It sounds like a company on a mission to shape the future of commerce, confident in its business model and people, especially with advancements in AI and stablecoins. Now, for the meaty stuff, a big part of this filing is about electing directors. The board is recommending a vote for all 11 director nominees. They're changing the board size to 11 directors, and they thank Ramon Lagotta for his contributions as he's not standing for re-election. They've also welcomed Bill Reddy to the board in 2025, bringing his expertise in payments, tech, and e-commerce. Digging into the board nominees, they've got a diverse group with a lot of experience. They break down the skills each nominee brings, like payments, technology, senior leadership, public company boards, financial expertise, global markets, marketing, risk, government, and geopolitical experience. And e-commerce and mobile. No. How? Looking at the demographics, the average age of the nominees is around 61, with an average tenure on the board of about 6.3 years. Importantly, 91% of the nominees are independent, which is a big deal in corporate governance, meaning they don't have direct business ties to Visa that could cloud their judgment. Let's talk about how the directors themselves are compensated. They get a mix of cash and stock awards. For 2025, directors earned an annual cash retainer of about $110,000, with additional retainers for leadership roles. For instance, the board chair gets an extra $225,000. They also receive equity grants, with a grant date value of $260,000 for each non-employee director in 2025. These grants vest immediately, which is a pretty fast turnaround. They even have a charitable matching program where Visa Foundation matches donations up to $15,000 per director. Then we get to the executive officers, the folks running the day-to-day operations. We see familiar names like Ryan Minerney, the CEO Paul Fabra, the Chief Risk and Client Services Officer Chris Suh, the Chief Financial Officer Rajat Taneja, President of Technology, and Kellyman Tullier, the Vice Chair, Chief People and Corporate Affairs Officer, and Corporate Secretary. Their bios are laid out detailing their backgrounds and responsibilities. This is the say on pay proposal where shareholders get to vote on the executive compensation. The board recommends a vote for it. This vote is advisory, meaning it is not binding, but the company says they'll seriously consider the results and shareholder feedback. This is where they really break down how they pay their top people. The philosophy is built on three main ideas: pay for performance, align with stakeholder interests, and attract and retain talent. For 2025, about 95% of the CEO's target compensation was variable and at risk, and for other top execs, it was around 91%. This means a huge chunk of their pay isn't guaranteed and depends on how the company performs. Looking at the actual performance for 2025, Visa hit some impressive numbers. Net revenue growth of 11.2% exceeded their goal of 9.8%. Net income growth was 11.5%, beating their goal of 8.2%, and EPS growth was a solid 15.1%, surpassing their target of 12.2%. That's strong performance across the board. Profits and revenue are up and they're hitting their earnings per share targets. This stellar financial performance is what they're using to justify their executive compensation. Beyond just financial numbers, the annual incentive plan for 2025 included goals in areas like business drivers, foundational elements, and company objectives. They exceeded goals in growth strategy, resource prioritization, and operational resilience. This shows they are focused not just on profit, but also on executing their long-term strategy and maintaining strong operations. Now for the really juicy numbers, the compensation table for 2025, CEO Ryan McInerney's total compensation was a staggering $31,560,660. A huge chunk of that, over $18 million, comes from stock awards and close to $6 million from option awards, with over $5 million from his annual incentive bonus. Chris Suh, the CFO, pulled in over $11 million. Rajat Taneja, President of Technology, over $22 million. Paul Fabra, Chief Risk and Client Services Officer, close to $10 million. And Kelly Mantalia, Vice Chair, over $14 million. These are massive numbers, driven heavily by stock and option awards, which is common for top executives as it ties their pay to the company's stock performance. Given the significant stock and option awards, it is worth noting that stock options are only valuable if the stock price goes up. They vest over time, encouraging executives to stay with the company. Performance shares, a big part of their long-term awards, are tied to earnings per S-share and total shareholder return over a 3-year period, meaning executives only get paid if the company performs well over the long haul. Moving on to audit matters. The board recommends voting for the appointment of KPMG LLP as their independent registered public accounting firm for fiscal year 2026. KPMG has been their auditor since 2008, and the Audit and Risk Committee reviews their performance annually, considering factors like their independence, expertise, and fees. For 2025, audit fees were about $11.3 million, with other fees bringing the total to around $14.2 million. This one's interesting. They're proposing amendments to their certificate of incorporation to limit officer liability, similar to what directors already have under Delaware law. This means officers would be protected from personal liability for monetary damages for breaches of the duty of care, except in cases of bad faith, intentional misconduct, or improper personal benefit. The company argues this will help attract and retain top talent by reducing personal risk exposure for officers making tough decisions. Now we get to shareholder proposals. The first one, from National Legal and Policy Center, asks for an independent board chair. They cite statistics saying 60% of S&P 500 companies now have separate CEOs and chairs, with 39% having an independent chair. They argue combining the roles weakens governance. The board, however, recommends a vote against this, saying their current structure with an independent board chair and separate CEO works well, and they prefer flexibility over a rigid policy. They point out their strong corporate governance, including independent committees and executive sessions. The next proposal, from John Chevden, would allow shareholders to act by written consent. The board also recommends voting against this, stating that important matters should be voted on at meetings where all shareholders can participate. They highlight that shareholders already have meaningful rights, like calling special meetings if they own 15% of the stock, and a proactive engagement process throughout the year. They're concerned that written consent could disenfranchise shareholders and lead to confusion. Then we have a proposal about reporting on risks related to online sexual exploitation, particularly AI-generated deepfake content. The shareholder points to Visa's role in processing transactions for industries with high exploitation risks and mentions lawsuits and scrutiny. The board is voting against this too, stating Visa strictly prohibits illegal activity on its network and has robust compliance programs, including AI-powered tools to detect such activity. They emphasize their work with law enforcement and partnerships to combat child sexual abuse material. The final shareholder proposal comes from the National Center for Public Policy Research, asking for a report assessing whether Visa's inclusion programs provide a positive return on investment, considering litigation risk. They argue that recent court rulings and a perceived crackdown on DEI initiatives expose companies to significant legal risks. The board also recommends voting against this, believing an inclusive culture is vital for innovation and employee development, and that their existing oversight processes are sufficient. They also argue that preparing the requested report would divert resources without providing significant new information. Looking at stock ownership, Ryan McInerney, the CEO, owns about 823,000 shares, a pretty decent chunk, showing he has got skin in the game. All directors and executive officers combined own about 2.1 million shares. The biggest shareholders are institutional investors. The Vanguard Group owns about 8.18% of the shares, and BlackRock Inc. owns around 7.32%. This reflects that Visa is largely owned by large investment firms, common for major publicly traded companies. Finally, the meeting itself will be virtual again this year. On the 27th of January 2026, shareholders can join online using a control number found on their proxy materials, or listen in by phone, though they won't be able to vote that way. They're also encouraging shareholders to submit questions in advance online or during the meeting. So, what is the verdict on Visa's latest filing? Financially, Visa is looking incredibly strong. Their revenue and profits are growing, and they're exceeding many of their performance targets, which is great to see for shareholders. The executive compensation is sky high, but a significant portion is tied to stock performance and long-term goals, which is a positive sign of aligning executive and shareholder interests. However, the company's stance on shareholder proposals, especially those asking for more transparency or specific governance changes, like an independent chair, leans towards maintaining their current flexible approach. They argue their existing robust governance practices are sufficient, which is a common response from large corporations. The push to limit officer liability is also something to watch, as it's a move being made by many companies to attract and retain leadership. Ultimately, Visa appears to be navigating the complex world of finance and technology effectively, with strong financial results underpinning their strategies. The main takeaway is that while they are a financial powerhouse with impressive growth, their approach to governance and shareholder rights remains firmly within the corporate norm, prioritizing flexibility and existing structures over potential shareholder-driven changes. Alright, that is our breakdown of Visa's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.